Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone. Making big calls on their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like the razor blade. This is where the big plays are made. Oh.
Well, good morning, everyone. Welcome to the opening playbook for Tuesday, October 14th, 2025. How's everybody doing this morning?
Oh, I guess doing as well as you can do when the market opens down 1%. It's always a little bit of a shocking moment to see so much red building overnight. Now, I will say the one thing I have going for me right now, Graham, is that at least AMD and Progressive are up on the day. At least those are showing up green, but the rest of the market looking pretty ugly. And Graham, I don't know what your overall thoughts are here. Obviously, it's Trump related. It's hard to predict all that kind of stuff. But I had said, I guess that would have been Monday of last week, that I am so bullish right now. My only hesitation is that it seems like everyone else has decided they want to be bullish now too. And now I'm like, God, maybe we will get some shakeouts now that it seems like everyone is just like, okay, yeah, forget the pullback. It's just going up. And of course, that's when we start getting some noise out there.
Yeah, I mean, let's keep in mind here, we're down 3% off the highs.
Oh yeah, this is not even 5% that we talked about.
I think we're within 3% of all-time highs. So let's all make sure that when we see the sea of red this morning, we don't immediately think, oh my goodness, this is worse than what happened in March and April. Yeah. We've seen this happen 7 times now since the bottom, and all 7 times the markets have ended up going right back up within like a week. So
yeah. And I don't expect anything differently until proven otherwise, personally.
Yeah, me either. And last week I told you guys the put to call ratio finally broke below that 0.75 number. finally, after touching it 3 times and bouncing. So we're expecting a breather. Now, obviously, the market moves on catalysts and news. So it just needed that little catalyst to take that breather. We had such a big flush on Friday. Like that to me was a nice, healthy flush where, yeah, sure, we may have a few days of jitters here. We may even go a little bit lower, but the buyers are here and the you got to follow the money. Quantitative easing, rates getting cut, money's getting printed, M2 money supplies going higher. All the big companies spending. We've seen deals every single day. AVGO yesterday with the deal. I actually saw this thing. I was reading up last night, and someone posed an interesting theory because my big bear case with the whole AI arms race is what happens when Meta runs out of cash.
Mm-hmm.
What happens when Microsoft says, we've spent a lot of cash, we're running low.
Mm-hmm.
That to me is when I say, well, that's when everything's going to crumble all at once. But I was reading this thing last night that basically said their theory is that if that were to happen, then the U.S. government would step in because they cannot afford to lose AI arms race to China. Basically, like the Cold War here, but for AI. To me, that would be crazy. It's time to get some Bitcoin and gold in your portfolio if that's the case. Yeah. But I guess when I was reading, I'm like, this is not too far off. Who's to say they won't?
Oh, I think they definitely will to some degree, but just to what degree that is obviously a question mark. Obviously, if that's 2028, there's someone else in office and all those sort of things come into play. But just getting back to the core of the market right now, I think so. So my expectation is if we start rallying right back today and we make up a big chunk of the ground we lost today, then I think honestly we'll probably be like all-time highs at the end of the week, like super quick recovery. If we're kind of lazy today and we finish somewhere near 1% down on the SPY, to me that signals more of, hey, maybe we will just get a couple more jitters and maybe we'll get a full 5% correction, which I think would be a great thing, honestly, for opportunities for us. And so just how quickly will we get the move back? I'm still ultra confident in that move back. Just the question for me is really only timing right now. And I don't see it, lasting long until proven otherwise. Obviously, I'm always willing to be wrong, shift gears when that's the case. But I'll tell you one thing that I'm looking at, just I think right now, just a very easy way to take some plays is just to trade the VIX directly. So this is what I'm looking at right here. This is the $20 level on the VIX. You can see how quickly since May, this is the April, obviously, when we really got crazy. So when VIX got up into the 50s and 60s. But you can see since then how quickly we've come down. This is a daily chart. So we popped up 1, 2, 3 days above 20 here. Here we popped up one day. Here we popped up 1, 2, 3 days. Here we popped up half a day. And then Friday we popped up, a half of a day. And now we're back up above. So the question is, how long will we stay above 20? If we go into an April flush, then it could be weeks. I don't expect that. I expect it to be days, not weeks. And the beautiful thing about the VIX is that if it pops up to 25, I'll just throw another one on there with a greater risk reward. If it pops up to 40, I'll just throw another one on there with the same level and a better risk reward. So the VIX is one instrument that I feel very, very comfortable and very, very confident actually laddering and stacking on trades. So that's one of the easiest ways. If you're not sure, hey, is Apple in the best position, to make a move here? Should we be switching to consumer staples? What about energy and nuclear? Should we be all in on the data mining stocks like Graham, I think you have on BitF and Iron that you've called? Maybe those are the play. Well, sure, all of those could probably have some potential, but I think the VIX is one of the easiest ways. If you just think, hey, we have a flush here, but things are going to get back to normal and we're still in a very healthy environment. And I don't mean healthy economically because we're not. I mean healthy stock market. This is one way to play it. So I did next week's $19, $20 put debit spread here. Cost me like 39 cents a contract, 61 cents of potential. So about 150% return for the VIX to drop back below 20. Keep in mind, those are those super weird morning expirations. So just be careful on managing them. But I think that's one super simple way to play it. And like I said, if I'm wrong and next week we're at 25, I don't even care. I'll just throw another one and I'll have a better risk reward. And I'll do that, for as many times as I need to, because I have a lot of confidence that the VIX will come back down. Even if I'm wrong and it's not next week, if it's 2 weeks from now, if it's 4 weeks from now, you can stack on those positions.
Cool.
And I'll
we also have, seasonally speaking, the volatility, but we were supposed to see it in July, August, September. It didn't happen. Seasonally speaking, VIX is high in October as well. But I will have another fun pick for you guys actually today. If you guys enjoyed the CLSK trade, let me pull my screen. Get a slideshow. If you guys pulled up if you enjoyed the CLSK trade, which by the way is now up 1,000%, finally, it's pretty much max profit. I have a new one for you guys today, and it's again from my good friend Dave, the Dave that we need to bring on opening playbook.
Dude, we need to first of all
show me
show
about
his,
it last night. I said,
account.
"Hey, say no more. Anything that comes out of his mouth is sheer gold." So.
When are we going to convince Dave to do what we did and come from behind the scenes and share some of
I've been trying, guys. Dave's IRA, and keep in mind we are talking about speculative plays here, but he does a great job of finding stocks that no one's ever heard of, like CLSK, BITF, and somehow seeing that they have a really good potential. So obviously Cypher, CLSK, BITF, IRON, all those went crazy. He's got a new one for us today. He also is big on the miners, which I think is a smart play. But he did the thing I was going to try and say is crazy speculative investments, right? These things, if something bad happens, these things are dropping 50, 60% on the underlying. We all know that. And Dave knows that too. But he has taken his IRA from $12,000 to $275,000 by just trading these kind of stocks.
And those are underlying stocks. There's no options.
Yeah. He will do some options, but he'll do like leaps. So like,
okay, gotcha.
It's about 2x leverage versus like 10x with the options, just because they're so expensive. Yeah, he'll go out months and months and months.
Okay, perfect. So
pretty crazy. Yeah. So he's got a new one for us today, and it's up 4.5% so far today. I should have told you guys about it last night when he texted me.
We're gonna have Dave, do the official speculative, long-term, small cap something where you can get his hit list, because it's getting ridiculous at this point.
I know, it's amazing. All right. Although we do have an issue that every time Josiah buys one of Dave's stocks, it immediately goes down. So last night Josiah bought BITF. It's a big shocker. We're down today.
So he ruined it for us, guys.
Yeah, I had texted him. I said, "You can't make this stuff up. You cannot make this stuff up." All right. Morning market update. Obviously, you probably know this by now. Markets are down slightly. We saw it down 1.1. We're now at 0.84 on the SPY. So we're climbing. Actually, the 60-minute income, the opening range breakout here, it just went a hair above the line, pulled back slightly. But it looks to me right now that we may be going for a gap fill, or at least a partial gap fill today, which would be, like Nate said, very, very bullish sign for us with this market. Now, we'll see. We don't want to guess. We don't want to be too early here. But
hey, can I say one thing real quick? This is just like a shameless plug for someone else to mention, just because it's crazy. Did you see JD's analysis for this morning?
Yeah.
He said, I'm looking for some continued selling pressure for the first 10 to 15 minutes, and then a turnaround and a move back up. And he bought calls like when the SPY was down 1.35% or something. So in 40 minutes, he's up over 0.5% on those trades, and it's using that morning scorecard thing that he does.
Love it. We'll have to see if you want to come on and walk us through that. It's a little bit more theoretical, Nate. Like, yeah, you had something like that. I can't remember, but all right. For the news this week, we have the Fed Chairman Powell speaking today at a very normal time of 12:20. Very odd time if you ask me. It just doesn't make any sense. It's a funny name. Our church down here is called 11:22, and the reason is it's the dumbest reason ever. I love the church, but because the start time's at 11:22, so you'll never forget the start time.
I think you did tell me that. Hey,
yeah,
you lazy people in Florida who like to be on the beach, you gotta make it simple.
So Powell's pulling one of those cards out of his sleeve today with the 12:20 meeting today from Powell. We'll see what he has to say. We have PPI on Thursday morning. And keep in mind, I think we were supposed to have CPI tomorrow morning. That got bumped back to next week. Very odd, Friday morning. So this is next week. I just flipped forward a week. CPI is Friday morning next week. Now, keep in mind, we do have this whole government shutdown and everything going on. So that's making everything a little bit wonky right now. But that got bumped back. So we have CPI on Friday next week instead of tomorrow. But we do have PPI Thursday morning, which is going to be an important report for us regarding inflation and what that may mean for interest rates, and then unemployment on Friday. Again, next week, CPI. Charts of the week. Here's just another one I saw from the Almanac Trader, which I love their stuff. He does some really nice, cool work of finding data points. But again, another quarter four data point for us here. Quarter four has always been positive after 4 or more S&P new all-time highs in October. So we had 4 all-time highs in October already. Every single time that's happened, it looks like I wish I would just do a tally here, but about 25 times, quarter four has gone higher every single time. So look, 4 more new all-time highs in October. We look at quarter four, 100% return, or 100% of the time it's higher with a 5% average return. So yes, we are getting a small shakeout. Looks to me like we should be buying this dip like we should have every single time we've had a 2 to 3% dip over the last 6 months. And this data point tells us we should be going higher and higher from here. Another data point here that we saw was that the VIX, if you look at the VIX over the last 25 years, every time it spiked 30% or more, the S&P went higher over the next 2 trading days, 98% of the time. We are already higher now, as long as the S&P doesn't fall, about 20 points? Oh, no, about 60 points today. Excuse me, I'm looking at this wrong. As long as the S&P, no, it's at 60 points. So about 1% from here today, this stat will hold true again. This is what I was saying earlier, that yes, we do have a blip on the markets, guys. We're not talking about a 10% pullback. We're not talking about a even 5% correction here. We're talking a few percentage points below all-time highs. A lot of people are getting scared. We saw the CNN, I'll show it to you, CNN Fear and Greed Index go to fear over the weekend, which is just crazy to me because we are at all-time highs and we are looking really good. Money supply is increasing. We know if we shift this chart over the markets, here's the S&P with the money supply lagged. Money supply is going higher. S&P should keep going higher. It's just following the money here. Bitcoin, same thing. This one's even like crazier how closely it follows it, but money supply is going higher. Bitcoin should keep going higher. That's one of the reasons I gave you that 150 price point on Bitcoin by end of year. Now, right now, Bitcoin, guys, is at 112,000. This is where it was just the other week before it had that crazy run up. I think this is a gift right now. It could go lower. My buying point that I wanted to see was 105. I just don't know if we're going to get there. So right now, in my opinion, if you're looking to dollar cost average in at Bitcoin here for the final run up, I think we are getting an absolute gift today on Bitcoin. I thought we totally missed it and we would never see it back again just about a week ago when it was at 125. Nope, the whole weekend news and shakeout got us a nice little buying point here on Bitcoin once again. And here's just that chart again of Bitcoin. I'll show you one more time. I'll show you probably a few more times over the next couple of weeks, but we are in that last leg of this second year bull run. So we have the halving event right here. Excuse me, it's like right in here is the halving event. And we normally have a 2-year bull run from there, happen every single time. And then now we're going into what they call the banana zone, right? The last leg, the last sprint up here. I expect the target at 150, roughly speaking, on Bitcoin here. So that's the data you got for today. For earnings, we are back in earnings season officially. Banks reported this morning. Hey, Nate, we got Progressive this week. Can they spark something? Can they get back on track?
I expect Progressive to jump at least 50% on earnings. That's, bare minimum.
Yeah. Now, keep in mind, guys.
I think they average like 0.5%.
Yeah, they do not move on earnings normally. But maybe they'll say something good, Nate, to turn them out of this slump because it's a great stock, but it's in a slump. We also have airlines picking up. TSM. This is one that I've had quite a few positions on lately. Actually, owned still a lot of stock. I think I'm going to hold the stock through earnings, but this is one of those semiconductor stocks that have done quite well for us. It's a seasonally bullish period. I'm going to have to double check the data, but I believe the numbers say that it has beat earnings every single Q3 earnings for the last 10 years in a row. So this specific quarter of earnings, I believe this is one of those little glitches where it has gone up every single time. Now, does that mean it will absolutely go up this time? No, we don't know that. But we do know, hey, something odd has happened here, something statistically significant that maybe we can trade. So that's something to keep in mind for you guys here. And then again, just more banks this week as we start to turn back into earnings season for us. For a market overview, last class, I said, watch out for a quick breather. I showed you the CPC. I said, we've touched this 0.75 line multiple times. We finally broke below it. Hey, I'm sticking bullish with the markets. I was calling a pullback for a while, never came. So let's just stick with the trend. But we did get this sign here that just says, hey, we're probably going to have a breather. This works out almost every single time when it dips below 0.75 on the CPC. And as you guys know, we got a little breather. Now, this came on news. We needed a little catalyst for it. It's made it a little bit bigger than probably what I expected. But we did get that breather almost immediately. So where do we go from here? Well, again, this to me is crazy. Let me just check it to this morning and see where we're at now. We're even lower. Look at this. I'm going to update this. This was yesterday. Let me update this for today. Guys, we are within 2 or 3% of all-time highs in the stock market. We have not had a crazy pullback in 6 months. And this is where market sentiment is. To me, we are 2 points away from extreme fear. To me, this is absolutely bonkers. It's good to be contrarian with this indicator when we get to like extreme greed levels. You want to be looking for profit taking. When we get to extreme fear, you want to start buying. This should really only be happening when the markets are down 6, 7, 8%. We're down a couple percent here, and extreme fear is almost on the horizon. Put to call ratio, right? We dipped below 0.75. We have already almost immediately snapped back to that one number. The one number, if it gets above 1, that's where we look to buy. So look at this. April 14th. Does anyone remember what was the April 14th? Let me just tell you this. The market bottom was on April 7th. April 14th was just right after that whole crazy up day. We had the put to call ratio finally flip back above 1. That's when I said absolutely buy this every last, go all in. Let's do this dream portfolio thing. Went raging higher from there. This has already flipped back that much off of just 1-2% drop. That just tells me how bullish the options market is right now, how ready to buy the dip they are. Seasonally speaking, we know October, November is strong. October, November, December, Q4. I showed you guys last week all those insane data points that point to a much higher quarter four, a very positive quarter four, about 3 times the growth speed in the markets. But we also do have this. Volatility averages typically spike here late summer going into fall. We did not necessarily see this time around, right? The markets kept going higher in August and September, which is unusual for the markets. I did show you guys when that happens, the markets tend to have a great quarter four. With that said, October is also still our final last high VIX month, seasonally speaking. So it's just something to keep on your radar. Presidential patterns going higher. Hopefully you've been showing up. So you know when I flip through this chart and don't spend too much time on there, you already know why. So my upcoming prediction for you guys is I am buying this dip. I should pull up that chart again, but every time we've had a 1 to 3% dip in the markets, buyers have stepped in immediately. Every single time. Look at this. It's almost perfectly. Actually, today it just touched the 50-day moving average again, just briefly, and they are buying it up. Here, let me pull this up here, just so you can see how beautiful this is. If I can get, oh, there we go. I have to drag extra hard. Look at this. Remember I said the markets were down over 1%? 0.6 already. 0.6. They're buying this up. But look at this. If you are a technical trader and you like technical patterns, whether you believe we're going to all-time highs from here or whether you think we're going lower, this is still a very, very bullish candle, buying off that 50-day moving average for a multi-day pop here on the market. So I'm buying this dip right now. Let me just flip over here. Look at this. We are looking very good here. Let me flip this to today. S&P, you guys get a freebie right now. Looking bullish, looking like we're going to buy the dip. Volt going higher, ADD going higher, and VIX going low. This is a perfect scenario for buyers to come in. All right.
It looks like as aggressive a buy the dip as we've seen the last 7 times in a row. It's like, it's almost seems too easy at this point, which makes me a little nervous. But, until otherwise, I think you just got to go with how aggressive this market is. My VIX position is already up 20%. I mean, come on, let's go.
Yeah. Yeah, I think so too. Now, and keep in mind, guys, you don't want to ever go all in. Though, let me be careful here. You don't want to ever go all in on something like this. Like, this is not the highest conviction entry in the entire world. It's a good one. It's a really great one to buy at a discount and get some good options plays on the board. It's not one where you throw every penny you have on options and hope for the best. With that said, when we get something like this where the markets fall 20% and we had a ton of data to show that this thing should go right back higher, that's one where you may want to go a little more aggressive. Again, never go all in. But that said, we know that this pattern has paid over and over again. So getting down to our sector view, we know seasonally October is good. November, December also good. But if we're going to break it down to the top ones, tech is the best here. It's also probably going to be the most volatile right now. Financials, staples, healthcare, all positive. We do have financials. A lot of them are reporting earnings right now, which I do find it interesting that when financials are reporting earnings, they typically outperform the market. I'm curious. Actually, let's go back here. Look at this, Nate. I literally did not even think of this till now, so I could be totally off. So here's financial earnings, 1.6 over 1.5 positive. 1, 2, 3, July, 1.9 over 1.5, outperforming. 1, 2, 3. Look at this. 0.2 over 1.6, outperforming. 1, 2, 3. So financials in 3 of the 4 quarters. I don't know if you followed that at all.
It's almost like the financial stocks are good at presenting their financials.
It is like the financials. Yeah. That's just a fun little one that I literally just thought of here on the spot. But when we talk about seasonally which stocks outperform their earnings, looks like financials are typically good ones to have during earnings. Maybe not in January, but April, July, and October quarterly earnings. For the sector breakdown, last class, these were our sectors. Again, this list is getting kind of long because we're opening it up. We know that we have a very, very bullish quarter coming up. We saw all the data points. We saw that a lot of sectors are good. So as compared to September and August, where there wasn't much to pick from as far as like high conviction entries, now there's a lot of good ones here. So last class, these were the ones we liked. This week, notable shifts. Nothing too crazy right now. We're just seeing things like gold and Bitcoin flip around, which makes these other move. But we saw utilities pop higher in the month or in the week over week. And we did see financials drop out of our top rankings, and then bonds sneakily moving higher. So for the top sectors right now, same crew for the most part. We're just going to stick with the ones that are performing the best overall on the average percentile. You could even put financials in here if I drag this down, but it is getting pretty lengthy where we're pretty much trading everything at this point. And then TLT actually doesn't look too bad right now as well. So getting into the nitty gritty, let's go ahead and find some trades for you guys. But first, before we do the Apex one, let me give you guys the Dave pick, unless you guys don't want it. And I'm gonna see if I can find something crazy here for us for the Dave pick. So if you guys don't know who Dave is, well, it's because nobody here really knows who Dave is. He works here with us, does a lot of our research. He's more of a nerd on the Bitcoin stuff and gold commodities. So he's been big on the miners for gold GDX all year. Obviously done really well. But he's also was way, way early on things like iron. I think he bought iron at $8. He lives in Michigan. I was up there visiting him back in late summer, and he was telling me about all these stocks and told me I need to absolutely buy them all. CLSK, Cypher, all of them. So I bought a little bit. He bought a ton. He obviously smoked it. But he does have a new one for us. Let's see how BITF. Oh, BITF is positive. Josiah does not ruin the streak here for us. I love it. So this is one of his newer ones, similar to Iron and CLSK. BITF. His price projection, his profit target on this one is $10. We got in at $3. So it's up huge for us. With that said, $10 still a way to run. But that's not the one I want to tell you about today. I'm going to tell you about a stock I know absolutely almost nothing about. But Dave texted me last night and said, this is one you definitely want to be looking at right now. CAN is the ticker. Again, Dave is a nerd. He knows all of these little things about this. This is an IT. This is a China-based company. So he said, be careful. It's a China-based company, but they basically his theory is that CAN sells to Iron, CLSK, Cypher, all of those the supplies they need for their mining and their energy production, what they do. Again, I am not going to sit here and pretend to be an expert on CAN. All I know is that Dave knows a lot about these stocks. He's been right more often than not. This is his new pick for us, CAN. And if you look at the past time this thing squeezed back in 2024, it went from 99 cents to $3. We're at $1.70 right now. He just bought in. I don't know when he bought in. I'm just going to be jealous if I knew. So let me go ahead and pull some options here on CAN to see if we can get a crazy play like we did on CLSK. Now, keep in mind, these ones are a little bit wonky because it is a penny stock. So honestly, if you want to go for a 100% move, you could just buy the underlying and try and sell it at 320 right back here. I also want to show you this. The last time it actually had a crazy squeeze. Look at this. It was back in 2021. It went from $4 to $39 in about 5 weeks. So things can get super crazy. No pun intended. But a legitimate one would be here from $1 wherever it's at to a little over $3. So what I'm going to do here is I'm going to see what the options look like for next month, just to see if we can get something crazy here. All right, not quite as crazy as our CLSK trade, but I'll take it. This one's a 525% return on investment. If this ticker gains about 60% on the underlying stock, so this thing has to move. It's up 12% today. But I'm going to type this up for you guys here in the chat. Highly, highly speculative, right? Can we all agree on this? Very highly speculative. Oh, Dave, are you typing this in the sheet? Oh, I didn't even know you were still here. I saw you fade away, so I didn't know if you had to bounce, but
Yeah, I'm here, man.
you're the man. All right. Where did I go? Here we go. CAN is we're going to buy the 21st of November, $2 call. We're going to sell the 21st of November, 2.5 strike call. Again, if you just want to trade underlying shares, be my guest. I own underlying shares. I'm going to go buy more after we get off of this class here in my speculative IRA or my SEP retirement account. With that said, these options pay 525% next month if CAN squeezes. Let me check my cursors to right here on my screen. Right here on my screen. When I said squeezes to right here on my screen.
Squeezes in the screen. Screens in the squeeze.
I sound like Bugs Bunny or somebody. Yeah. So this is a highly speculative play, just like we did with CLSK. Those are the options. I looked through a couple other ones. If you want to go out to January, you can. But the problem is that they're a little bit more pricey. And there really wasn't. Oh, if you can get filled at this one, that might be a fun one. Let me just test this. Test the water here. I doubt. Oh, it filled at 3 cents. All right, I'm going to give you a more speculative one then too. If you go out to January expiration, so 16th of January, buy the 3, sell the 3.5. That would be a full squeeze up to here. If that happens, this option pays 1,500%.
That was 16th, January 16th?
That is correct, yeah.
Buy the 3, sell the 3.5? Exactly.
Let me see.
I got it.
And you might have to play with these guys because, like, if you look here, this one's a 10 cent. This one's a 3 cent. This one's a 5 cent. So just set limit orders here. But you can play with some of these options, see what you can fill out. The volume is really good. Volume and open interest, very, very strong, very good numbers here. But if you just want to play it, I probably would not go past 3.5 strike. And again, you want to see some crazy risk to reward here because these are like scratch-off tickets, just like CLSK was for us. But when it works, it can pay insane amounts. So I got a limit for I'm going to try and get 30 at $3 there on top of the November ones that I never actually placed. Let me set this up. I'm just going to set it at 8 cents, guys. And I'm not going to, again, you don't want to rush these. Although if it's moving, who knows what's going to happen. But just be patient with your fills here. And the cool thing is, I just want to show you this. If you bought an at-the-money call, it's 50 cents. So if can goes to 250, like we're doing with the spread here, you make 100% return on the call. With our spread, we're making 500%. So would you rather make a 100% ROI or 500% for the same move on the stock? I think we'd all want 500%. That's why we like trading this way. That's why hopefully if you haven't already, you go into the Opening Playbook members area and go check out the training on why we do debit spreads. Should blow your mind. Again, that's 5 times the reward for the exact same result by just selecting the options the right way. Down here, let's look. If you bought here at, we'll just do the same strike, and it went to 350. This would go up about 300%. These options would. Ours are going up 1,500%. 5 times the bang for the buck on the same result. Hopefully you get a chance to watch those trainings. All right, now back to the main dealio today. Let me go ahead and pull up the Apex software and see what we got on tap for today. Would love, love, love to get something on the books while we're at a small dip in the markets. Although if you look, I just told you the SPY was at 0.7. It's at 0.55 now. So we are seeing the dip buyer step in at the moment. All right, we're going to go over here to the Apex software. Again, cool thing is it shows it lights up green if there's a new signal. It lights up blue if there's an active signal. And then it doesn't light up at all if there's no signal. So let's go ahead and flip over here to AMD, which has a new entry for us with the profit target of 227 on AMD. That's about $8 from here. Of course, if you want to buy the underlying, you can. But if we want to trade the options, we know about 80% of the time it exits within 22 days. So the Apex software knows this and will pick the options for us. Now, I have to imagine that these are going to be shorter dated expiration. Yep, 24 of October. And let me just make sure. I'm pretty sure they don't have any earnings. Then nope, we're good on the earnings window. But if you want to trade AMD, let me post this in the chat for you guys. AMD wrap order debit spread. That would be the way to go. This one's 140% ROI at expiration. Pretty awesome there on AMD. So let me go ahead and pop up my options chain. Get these on the board. Let me tighten this up. Close some of those. All right. Buy the 217. It's perfectly wrapping it. The price is 220, so we want to wrap it up. This one's showing 260, so I'm guessing that the Apex software just hasn't updated since the market opened because obviously AMD, like much of the market, opened lower and has now gone higher. So it is a bit pricier. I'm going to set it at 250 for my limit and just see if we can get filled there. Oh, AMD is moving fast. So I may have to just go up one. Let's go ahead and adjust those strikes. I'm going to delete that. We're going to adjust it to buy the 220 unless you can get filled at that price. But I'm going to adjust it to buy the 220, sell the 225. It's at a net debit of 125. So I just adjusted it in there in the chat. I think that updates for everyone.
It does. But
I should get filled right away at 125. You might even be able to get cheaper. I just saw it dip 120. Filled at 120 as well. So you can be patient with that one. Of course, if you want to get real crazy here and see if we really step in and buy this dip, let's see what it says for the max ROI spread. Oh, it's not that much better of a payout. Let me check the options here. Yeah, I would just stick with the wrap order here, to be honest. If you go out of the money, it's $1. That's 150% ROI. We're going to get a little over 100 here and be a lot safer. So I would just stick with the wrap order here on the Apex signal for AMD this week. All right, we'll keep on cooking. The new dashboard pick of the week, the On the Clock Stocks dashboard, which, by the way, I'm hopeful that we will get live to the members on Friday. It's looking sweet. The calendar is looking awesome. We're just refining it because what we want to do now, just for any of the members who are curious, obviously the calendar is going to post the stocks that go up every single year on those exact dates. Problem is, now that we have this data automated, some days we'll have like 5 stocks. So now we're working on ranking criteria of how to know which one to trade. If AMAT, Apple, and NVIDIA all pop up, which one should be at the top of the list? So that's what we're working through right now, because just because, AMAT, maybe a stock that you've never heard of has a 10% average return, but maybe the options aren't liquid. Well, I would rather trade a stock like AMAT, who we can trade the options, if that makes sense. All right, so AMAT has gone up every single year for the last 10 years. Oh, I don't know where that thing went. Let me do this. Flip back. Oh, it's probably because I was in full screen. All right, AMAT has gone up every single year for the last 10 years from November the 13th through October the 13th through 19 days from then. So what is that? 22, 32 through November 1st. It averages a 4.5% gain, and we can go ahead and trade that here. Of course, what's going to be super cool is that the new software, which we're hoping to release on Friday, will be able to select all of that information for you. But let me go ahead and flip over here to AMAT. This one may be one of those earnings ones. Nope, we're good on the earnings window. So we're good here. Averages a 4.5% move by November 1st. I'm going to go ahead and slide in at the 31st of October. You can see I already have some options here. But if you want to trade this one at a wrap order, let me just open up that wrap for you guys. Yeah, we had a better price earlier, but I'm just going to open up this wrap for you guys. AMAT is the ticker. This is just a on the clock dashboard pick. Entry date is technically, just so you know, October 13th. That's the benefit of having the data early. You're not a day late like we are today, but we should be fine. 19-day hold, 4.5% average return. All right, options I'm going to trade here is 31st. I'm going to buy the 31st of October expiration 217.50 call, and I'm going to sell the 31st of October 225 call to try and wrap that right in the middle. I would do a net debit, guys, at 250. So right now it's showing 258. Set a net debit at 250. You might even be able to go a hair lower. Let me see if this fills. I would just set a net debit at 250 and let it go to work for you guys. And if it doesn't fill, you can bump it up, but really this should fill at 250. It's right in the middle right now. You should maybe even be able to get it for cheaper. With that said, let's say it makes that usual seasonal move of 4.5%. Where would that put this stock? I would put it at 229. So we'd like to slide in just below that and see if we can go for what I call the max ROI payout. This is no good on the bang for the buck. So your payout here is about 150% if the stock moves 4%, which is definitely within range, right up here. But that's a little bit kind of like what we saw with AMD. That's a little bit of a stretch for me compared to what I'd like to see. And the reason being is it may just be because the options are a little bit low liquidity. Let me see if I can get filled on this. I'll give it to you guys. Oh, filled at that one. All right, just use limit orders, guys. Use limit orders when doing this, especially when the open interest and volume is lower. You set the price you want to pay. Do not let the market maker tell you what to pay. This is a high-risk trade here on... Wait, I got some questions here. Said 225 showed 222.5. Yes, guys. It should be there in the chat.
Just posted in the announcements as well.
Okay, cool. Thank you. 222.5. All right.
Yeah.
If you want to go for this out of the money, maybe it'll fill at 65 cents. Let's see. Let me just copy these contracts down. This is a high risk one here, guys. Again, high risk coming your way. High risk, high reward. 227.5 is what you're going to be buying, and you're going to sell the 230. This is going for that full move. I got filled. I'm just going to put it in the chat at net debit of 0.70. So that means that this will pay 257% return on investment if AMAT does get to that max level here. I got filled at 70 cents right away. I just set one at 65 cents. That has not filled yet. So we'll see what happens there. But that's your seasonal pick here of the week and the options that correspond with that. And then again, for Newton, here's some tickers I like right now. FCX is also a gap. I'm not going to go through each one. But those are the tickers that fired off yesterday. I'll go ahead and pull up the scanner today. There was quite a few that fired off yesterday. Those were the ones I liked the best. Let's see what we got today. Oh, PPL looks pretty good. I don't think I've traded this one. It's utility stock. Utilities are very, very strong. We saw the utility sector jump 3 or 4 spots week over week. PPL could be a good one. Just keep in mind. I'm just typing in chat. Oh, PPL. It's auto-correcting to people when I do this. All right. Newton. Keep in mind they do have earnings coming up on the 31st, but this is a beautiful trend. Nice chart. Look at the weekly. I mean, my goodness. PPL looks really nice. All right, let me go ahead and pop in the chat here and see if we have any questions from today. Nate, if you have anything else left to cover, let me know.
The only thing I have to cover is that I mentioned earlier this morning with some volatility picking up. Of course, now it's already down to 2090, but I'm going to try to take advantage of that in a different way with the income machine, try to get some more bang for my buck on the volatility because you get a little cushion there. And so I know obviously you had today's session mapped out with training, so I just told Josiah to set me up at 1 p.m. So if anyone wants to jump in at 1 p.m., I'm going to do like a 10K trade on my favorite one. I wanted to let the market settle for a little bit too, so it was another benefit of doing it kind of in the middle of the day. So if anyone wants to join me, just keep an eye on my Telegram. I'll shoot out a link there. We'll just go live at 1 p.m., cover a little bit of what I'm thinking with the volatility and a more unique way maybe to take advantage of that versus like trying to get the direction right. And then I'll throw about 10 grand on my favorite income machine play there. So anyone wants to jump in, like I said, just keep an eye on my Telegram. It's the easiest way to get the
Cool. That'd be fun.
I have one thing real quick because I just keep forgetting to mention it. For those who were in attendance and won any of the questions during our Stocks After Dark trivia night, you should have gotten your gift card last week, and I just kept forgetting to say that on any of these programs that you should have gotten it already. So if you did win one of the questions but did not get your gift card via email, please hit me up in the chat. Let me know.
Awesome. Cool. Well, with that said, I mean, the markets are raging back higher. Like we said at the start, I wish we would have put on a trade here at the start. Well, I mean, I did for the 60-minute income program. But we're only 0.4 down now, Nate. We've already gained a lot of traction back. Actually, the 60-minute trade's already up 30% today.
Wow.
In a matter of minutes. So,
and did we fill the gap at this point? We have to be pennies away from the well, not from the opening gap, but from the yesterday's lows, I should say.
We have definitely come through. Wait, let me just double check. Yes, we have come through yesterday's lows. We've almost filled the gap.
Yeah, next stop is the full gap.
I think we may have filled the gap from the open yesterday.
Yeah. I mean, I was thinking like from the close. Do we fill the full close to open gap? Obviously, not quite yet. That would be
not quite. Yeah,
but it's neutral. But
on a chart visual, we are pretty much there. Anyways, things are looking really good right now. With that said, we do have volatility still high right now. We've had it, spiking for the last few days. Even today, volatility is up 10%. Markets are barely down a sliver. The reason I bring this up is when volatility is high, our 60-minute income trade really, really thrives. It does the absolute best. The results, we tested both low VIX and high VIX. The high VIX just absolutely smoked it. We were on a 4-trade win streak, looking like a 5-trade win streak here. And you probably are too late to take today's trade, to be honest, because we're already up 33% right now. But we get this trade every single day of the week, especially when volatility is high, like right now. So hopefully we can keep this win streak going. The best streak I saw was 17 in a row. So we're still young to see if this thing can keep rumbling. But if so, it's a really, really fun trade to make every single morning. You guys can jump in on it starting today or tomorrow if you stick around and check out this presentation.
Love it. Performance displayed here is from both real-time and 2020 hindsight combined. We looked at February 18th this year through June 18th with a backtested win rate of 87%, an average return of over 32%. That's including winners and losers combined. And the live trades that Graham's been doing since June all the way up through 7/18, that's July 18th, produced an 86% win rate. So right on par with a similar average return of 31.8%. And of course, that's over 1 day hold time. Now, Again, you guys know this, but in trading, we're going to have losers. As excited as we are about this, no strategy wins 100% of the time. The purpose of the work we're going to show you today is to give you the biggest edge possible, but that doesn't mean you should trade with money you can't afford to lose. Now, I'm Nate Tucci. Most of you guys know me, and today I get to share an idea that could be worth $500 or more by tomorrow morning. In fact, things go as we expect, should hit our account within the first 60 minutes of the trading day, not a minute later. Now, all we'll have to do is set our position up right around 10 a.m. tomorrow. And then we'll let the market move, whether it's up or down a few ticks in either direction. And as long as that happens, we should see about a $500 return based on that 1K stake in our account within the first 60 minutes of the day. Now, I understand that sounds a little crazy, maybe even too simplistic to actually work. But if you look at our trade from Friday, June 20th, anyone using this unique trade could have set the position here right before 10 a.m., as you see there on the chart, spent the morning at the gym, not that I would ever do that, but you could have done that, and come back just 60 minutes later to an extra $519, even as the market just kind of grinded lower throughout the day. Or how about Monday, June 23rd? It's the next trading day. Anyone following along could have popped their trade right around 10 a.m., met some friends for coffee, and come back 60 minutes later to an extra $511, as we see right there. And then, by the way, the market didn't move all that much higher and then fell apart later in the day. What about June 25th? Once again, anyone leveraging this unique trade, you guessed it, could have set up the trade right about 10 a.m. in the morning. Spent the next 60 minutes walking on the beach and come back to an extra $512, even though the market decided to move lower that day. That's $1,542 over the course of 3 consecutive trading days. And keep in mind, these are not back-tested trades. They were not pulled from a study. These were real trades found and taken by today's guest. In fact, based on his research, these 60-minute opportunities would have hit with an accuracy greater than 87%, like on February 24th. We could have popped in our trade right around 10 a.m. I know, shocker. Spent the morning at the range, hitting a few golf balls. And even though the market ticked lower that day, we would have seen an extra $511 hit our account just 60 minutes later. What about the next day? February 25th, we simply set up the trade right before 10 a.m., as you see there. Do whatever you want to do for the next little while. Come back 60 minutes later to see an extra $511, even as the market slid lower. And here's the cool part. Each one of these returns would have automatically hit your account within about 60 minutes of opening that trade. We don't have to babysit the options. We don't have to time our exit. We don't have to close the trade manually at all. All we have to do is set up the position right around 10 a.m. And I'll admit, something like this doesn't seem like it should be possible, right? But it's all thanks to a unique anomaly that happens each morning and allows us to target $500, usually within the first 60 minutes. Now, let me assure you, this is not some silly gimmick. This is an anomaly that's been found in markets all around the world. It's probably one of the most accurate predictors of market direction that we've ever seen. Sadly, most folks just don't know how to leverage it. But today, that all changes. You see, our guest has promised to share the secret behind these 60-minute returns. In fact, tomorrow morning, he'll walk us through a brand new opportunity targeting, you guessed it, roughly $500 when it triggers. But not just that. He's also going to show us how to stack these daily trades to target an extra $1,500 a week. So if that sounds exciting, well, then I'm happy to welcome you to the 60-minute income plan. Thanks so much for being here. Now, if this is your first time, like I said, my name's Nathan Tucci. I'm so glad that you're here. I'm the senior income strategist for the Prosperity Pub. And over the last few years, I produced some of our firm's most successful trading strategies, like overnight options that had an 86% win rate. In fact, one of our best turned $10,000 into north of $50,000 over about 120 days that I shared publicly. But this new 60-minute income plan actually piqued my interest quite a bit. It's all the attributes of a strategy that I love to trade for myself. High success rate, can't go wrong with that. Limited risk, defined risk, low hold times, quick execution, and affordable options. And most importantly, the chance to target an extra $500 each morning. There's an opportunity. Now, the man behind these 60-minute returns is my friend, Graham Linman. He's one of the smartest and most diligent traders that I've ever worked with. In fact, he's the only trader in our firm's history that's trained under a former hedge fund manager and a trading champion and the former vice president of a multi-billion-dollar trading firm. In the last year, he's shown our readers how to double their money or better 63 different times using traditional directional strategies. Now, some of his best include 108% winner on Twilio in about 7 days, 163% winner on NVIDIA in 1 week, and even 284% on IBIT in 18 days. But today, he's doing something completely different. He's going to show us how to target $500 regardless of which direction the market moves. You see, with this type of trade, the market can tick higher or lower within the first 60 minutes of the day. Yet each scenario offers the chance to collect a $500 profit. And that's why I've asked him to be on here today and show you exactly that. He's going to walk us through some of the recent examples, including live trades, so that we can set up tomorrow's new trade. All you need is a basic trading account like Robinhood, Tasty, Interactive, Schwab, whatever you have, and then a few minutes to set up the trade. And as long as the market ticks in one direction or the other, we should see a profit hit within about 60 total minutes. So Graham, why don't you show us how the 60-minute strategy works?
Well, absolutely, Nate. And I would love to. There's been a lot of anticipation leading up to this. I'm very, very excited. Now, before I get too far along, let me just go ahead and clear the air here. Today, you're going to see a lot of winning trades. Now, our team has spent the last 6 months testing and trading the 60-minute income trade. And according to the research, these 60-minute opportunities would have hit with about an accuracy of 87%. In fact, anyone who took each trade this year would be looking at $25,285 in trading profits. That's based off of a $1,000 starting stake. So not a big account, up to $25,000 winners and losers included. Now, obviously, that's a really great number, especially considering that starting stake is only $1,000 per trade. But that does not mean losses won't happen. In fact, our market ticker does something uncharacteristic. It is possible to lose. So if you decide to trade with us tomorrow morning, do not over leverage yourself. You see, finding success in the stock market is not about closing one big trade every once in a while. It's about doing one thing consistently and watching the results compound. And that's what the 60-minute income plan is designed to do. It's a basic trade anyone can implement any day of the week. Now, all we have to do is set the position before 10 a.m., let the market move a few ticks in either direction. And as long as that happens, we can see a $500 return hit our account in about 60 minutes. And it's been proven to work in the best of times, but more importantly, during some of the worst times as well. And folks, that's not an exaggeration. For example, let's look what happened at the end of February. Now, if you don't remember, that was the worst stretch of trading since the pandemic. Worst stretch in like 5 years. Over the course of 33 days, the market lost $11 trillion. Some folks are getting punched in the face. Now, that was one of the most aggressive downturns in the history of the stock market. According to Fidelity, the average 401k lost $127,000. And if you're trading options, good luck. $1,000 into any long call option out there would have most certainly expired worthless. However, $1,000 into the 60-minute income plan would have posted a very different outcome. In fact, it posted 12 consecutive winners in a row. Here, example one, $500, 509, and the next day, 500. This is each and every morning. You can see how this stacks up over and over again. We just place the trade at the beginning of the day, let it do its thing for the next 60 minutes, and usually hit our profit target automatically, even if your computer's not open.
Yeah, I mean, that actually is incredible, especially given how ugly that market was. Well, most folks are certainly losing money. The 60-minute income plan would have paid out 12 different consecutive times. So if we look at the math, that's worth a profit of about $6,052 over the course of those 12 days. Now, to put that in perspective, that's more than a month's salary for the average American. But according to your research, your study would have accomplished that in just 12 basic trades each morning, triggering around the same time.
Yeah, definitely. It's amazing. Now, to be fair, we would have lost trade number 13. As accurate as this 60-minute income trade can be, it's not invincible. Nothing is. With any strategy, there's bound to be some losers along the way. But in this case, we would have gone 12 for 13. Not too bad, right? That's a 92% win rate, all while the market lost trillions of dollars and a lot of investment accounts are down big.
Yeah, and honestly, you're being quite modest as we go through those numbers, because there's the part of the story that you haven't even gotten to yet. Over the next 3 weeks, while the market continued to slide aggressive, you guys were thinking, listen, you just showed us a 12 luck streak, but then it got really bad. Well, anyone using traditional tactics would have seen it go from bad to worse. They would have gone horrible as the market doubled down on Liberation Day. But anyone who continued using the income plan would have actually been just fine. I would say a lot better than fine. They would have seen 15 additional winners with 93% accuracy as things went from bad to worse. Now, for the sake of time, I won't walk you through every single one of those trades, but I will say each opportunity, you guessed it, was worth at least $500 in additional income. So that's an extra $6,923. All of the market went into an absolute free fall.
Yeah, Nate, that's exactly right. Now, I'll admit these numbers are quite alarming. At first, it doesn't seem possible, especially when you consider all of those individual opportunities were worth a grand total of $12,975. It's including winners and losers. We're not cherry picking here. But we spent 6 months trying to disprove its accuracy, prove that it doesn't work. Well, we ran back tests, stress tests, and I've done dozens of live trades as well, and each one of them passed with flying colors. And I even looked at every setup that would have fired over the last 12 years. I went ahead and back tested SPX all the way back to its inception date. Since the very first day you could have traded this, and the results were insane. Over 900 winners with an accuracy rate of nearly 87%. There you see it, 86.6%. And even more impressive, the ROI would be upwards of 15x, just risking a small percentage of the total account. Now, if you're skeptical, you have every right to be. Trading can definitely be hard, and there are so many variables that you have to get right. First, you have to pick the right ticker. Second, you have to time the entry. Then you have to time the exit, and you have to be on the right side of the direction. But with this new type of trade, we don't have to stress about any of that. In most cases, the market can move a few ticks in either direction, and we still have the chance to target our 60-minute income. All we have to do is make sure the position is set right around 10 a.m. in the morning, for example, like what happened back in March. Now, in this case, the market didn't lose $11 trillion, but trading conditions were definitely far from ideal. Look at all that chop, down then up, all over the place. Now, all of the news surrounding the tariffs created this stretch of very, very volatile days. And most traders typically avoid this type of volatility. But with our trade, it really didn't matter. That's because the market can tick higher or lower, yet each scenario gave us the chance to target our 60-minute income. For example, let's look at Monday, March 10th. In this case, the market opened up very bearish and closed lower on the day. You can see it right there. Anyone trading long would have been stopped out for a loss, but not us. As long as we had our position set up before 10 a.m., we'd seen our 60-minute income. And in this case, it would have been worth an extra $510 in profit in just over an hour later. Not bad at all, but let's jump to Wednesday. Once again, the market sold off at the open, eventually closed in the red. Anyone with money on the line would have posted another losing day. But again, using the 60-minute income plan, we would have seen an automatic $511 hit the account. That's a 50% return in a single day based on a $1,000 entry. What about the next day? Another bearish opening and another loss for the average trader. But remember, it doesn't matter if the market decides to tick higher or lower. Each scenario gives us an equal chance at collecting our 60-minute income. In this instance was no different. As long as the trade was set up before 10 a.m., we would have seen another profitable outcome. This time worth an extra $510 just over an hour later. Now let's look at one more. On this particular day, the market actually opened strong that morning, but eventually it sold off after a surprise announcement regarding the tariffs. Now that's obviously a punch in the gut for anyone who bought calls that morning, but once again, it didn't impact us at all. As long as the position was set up before 10 a.m., you would have seen the 60-minute income trade pay out $500 in less than 60 minutes on this particular morning.
Yeah, unbelievable to see some of those, even when you get the reversals. Despite the market posting 4 different openings, your trade posted 4 different winners. Anyone who started the week with just $1,000 would have walked away with $2,100 in extra income. Each has a 200% return on their money over the course of just 4 days. Double your starting stake, and we're looking at $4,112 on those same 4 trades. So, folks, I don't want to sound cheesy, okay, but it would be pretty great if you could see an extra $500 hit your account before noon on most days. That's money that could be used for any number of things, whether it's a weekend getaway, a day at the spa, tickets to the ball game, fancy dinner, whatever you're into, it doesn't matter. It's kind of like having a side hustle, but without putting in the extra hours.
Yeah, and well, Nate, that's only partly true because despite historical win rate being upwards of 87%, we still have to set up the trade. And the market still needs to move a few ticks in either direction. But ultimately, that's what we're striving for. And that's honestly what happens almost every single morning. You see, the 60-minute income plan was designed to work in tandem with your life, not alter your life. So if you have a job, don't quit it. If you're saving for retirement, don't stop. That's not what this strategy is about. It's about using a small portion of our current investments to target additional income each and every morning. But of course, never risk more than you're willing to lose, because this isn't designed to make you a millionaire overnight. We're not buying lottery tickets, and it's not going to allow you to retire tomorrow. The goal is to collect around $500 a few times a week in hopes to make life just a little easier. Now, if you want to target more or less, you absolutely can. You can target 50 per day, 100 per day, 500 per day, or even $1,000 per day. That's what I'm currently doing, and we're on a hot streak. Been hitting $1,000 each morning over and over again. But it's totally up to you. We've had traders of all ages, skill levels, and account sizes following along, like Rod, who made $58 on his first trade. Jason booked 140. Dave made 420, and Ken, he's shooting for $1,000 a day, just like I am. Now, my point is, it doesn't matter what struggles you've had in the past. It doesn't matter if you've lost your last 10 trades in a row. Our trade was designed to target daily income regardless of whether the market decides to move higher or lower that day.
Yeah, and it seems like you're sharing the strategy at a very convenient time, because the last few months have been very taxing. I mean, most of our members know that. We're dealing with a new administration, a weakening dollar, trouble in the Middle East, all kinds of other global conflict as well. The tariff backlash is still very much in the news, a looming nuclear crisis, and a host of other issues that everyone's competing with and are affecting the market every day.
Yeah, Nate, you're exactly right. And a lot of the folks we talk to, they are worried. Saving rates are down, interest rates are up, and many are struggling to cover the most basic needs. If you look at the numbers, the average monthly salary is around $4,500 a month. But when you factor in the bare cost of life, mortgage payments, transportation, insurance, healthcare, food, you name it, cost of living is now upwards of $6,000 a month. So we've got this $1,500 income gap each and every month. And it shouldn't come as a surprise that 60 million Americans are now actively searching for additional sources of income. Now, in my opinion, an extra $500 per day would definitely move the needle for most people, but sadly, it would require an additional full-time job. Now, most of us don't have that kind of time.
Yeah, I mean, that's right. I certainly don't have a whole bunch of extra time. Like most folks, I have kids, although I have more than most folks, to be fair. I've got a full-time job here and plenty of responsibilities that need my attention every day. Working a second job is not really an option for me. But with your 60-minute income plan, we have a real chance to target that $500 each morning. And with what you've shown, it wouldn't be a stretch to help fill that $1,500 gap each month. Based on the average return, it would take 3 trades, 3 winners to get you to that $1,500. So, Graham, why don't you show us how these trades work and then how we can actually set one up starting tomorrow morning?
Well, I'd love to, Nate, and that's why we're all here. But first, I'd like to remind everyone that we're not perfect. With any strategy, there's bound to be both winners and losers. That's why we never go all in on any single trade. And in our case, we don't have to, because we get the same opportunity almost every day of the week. In fact, our data shows that this trade won about 7 times more than it's lost. And that's not because we're doing anything overly special. We're just simply aligning our trade with the market's intended direction. You see, a lot of people don't know this, but the market tends to move in the direction of its opening candle. So if your opening candle is green, the market tends to continue higher. If the opening candle is red, well, the market tends to continue lower. This is the anomaly that I was referencing earlier. If you want to Google it, it's called the opening candle continuation, and it's probably one of the most accurate predictors of market direction. In fact, on days where the opening candle is green, the market has closed higher about 75% of the time. And on days where the opening candle is red, the market closed lower just under 70% of the time. And keep in mind, this is for trading days throughout last year and this year. It's not like this is data from the 90s or even earlier in life. Now, in most cases, you can pick almost any random day and see exactly what I'm talking about. For example, let's look at April 21st. Opening candle, what color was it? It was red. Sure enough, the market closed lower that day. May 19th, opening candle was green. So look at this, the market closed higher on the day. Same thing, June 16th, green candle there at the open. And once again, the market's closed higher.
Yeah, it's actually insane that that simple thing could be that high of a predictor. But let me make sure I understand exactly what we're talking about. So if the day opens with a green candle, the market is actually closed higher 75% of the time than the open. And if the day opens with a red candle, it's actually closing lower about 70% of the time. The red one's even crazier because the market is usually, more bullish. But here's what I'm wondering. Why does your win rate show upwards of 87%? Because obviously the math doesn't add up there.
Well, Nate, that's really the secret sauce of all of this. We don't really actually care where the market ends up closing for the day because we're not interested in holding the trade all day long. We're really only interested in the first 60 minutes following the opening candle. That's where almost all of the continuation happens. So let's look at our charts one more time. Here's that opening candle, right? It's red. And then here's the next 60 minutes of continuation. Red, 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 all the way down. And then you can see here where the market finished for the rest of the day. Same thing to the upside. Opening candle, green. Next 60 minutes of continuation is higher. And then you can see how the market finished there. But you'll notice that all of the continuation happens in the 60 minutes following our opening candle. You see, if the opening candle is green, we almost always see a strong buying response from the institution. As you'd expect, this can carry the market higher and higher. And the same is true when the opening candle is red. When we get that red candle, it will almost always create a selling response driving the market lower. Now, for us, it really doesn't matter if the opening candle is red or green because we just structured the trade where either scenario would give us the chance at our 60-minute income profit. For example, let's look at what, back in June, what happened on June 12th. In this case, the market opened with a big green candle. You can see it right there. As expected, it helped create a buying response and the market ticked higher. And as long as our trade was set up before 10 a.m., we'd have seen an extra $500 hit our account in less than 60 minutes. But notice what happened next on that day. The market didn't necessarily crash, but there wasn't much additional upside. Like I said, most of the continuation happens right after the opening candle. In fact, we found we could significantly increase the win rate by just targeting that first 60 minutes after the opening candle. And based on our research, the accuracy jumps from roughly 75% all the way to upwards of 87%. Now, when you compound that over time, that could be worth thousands of dollars in additional income. For example, like on June 16th. Once again, the market opened with a big green candle. It's a clear indication that buyers would most likely carry the market higher. Sure enough, that's exactly what happened there. And in our case, it would have been worth an extra $500 in just 40 minutes. Now, obviously, that's a great return, but I don't know a single person who would be upset with an extra $500, especially considering it would have hit their account automatically. And that's the beautiful thing here. The exits are all automatic. But look at what happened after that first hour. After that first hour, the market began to fizzle and ultimately closed below the morning high. But again, it didn't matter to us one bit because we already collected our income and we are on with the day. And that's what the 60-minute income plan is all about. We're not swinging for the fences, not chasing home runs. In fact, we're not looking for big market moves at all. We're simply structuring the trade where a few takes in either direction should be good enough to produce a successful outcome. So let's look at one more. How about June 18th? Once again, the market opened with a big green candle. As always, the buyer stepped in and the market ticked higher. So if you entered your trade at 10 a.m., you would have seen the 60-minute income hit your account, $509. But now let's look at what happened next. So we're out of the trade. We're on the sideline. We're done for the day. Well, after that, the market sold off, closed lower for the day. But that didn't matter to me because we don't care where the market closes. You can shoot to the moon or burn to the ground. We really only care about that first 60 minutes following the opening candle.
Yeah, Graham. Well, you never seem to disappoint. Here we go again. Anyone who took all three of those trades would have seen an extra $1,509 in less